Hello everyone. Welcome to Outperforming the Market. I'm Mary. Today's market trend seems to have broken below the annual line. But I believe this is just a technical pullback, and the narrative is still ongoing. Last Friday, the S&P just successfully closed above the annual limit. Today's decline is merely an emotional disturbance, and it might resume its upward movement as soon as tomorrow. The technical aspect hasn't been broken, and the story is still being written. Let's take a look at what forces are brewing behind the scenes. Let's first take a look at the daily chart trend of the market. Today is a high 9 signal in the DMARC indicator, which often indicates a potential turning point in the short-term rhythm. Although the index has fallen below the annual limit, it has not yet touched the 5-day moving average, showing that the bulls still have resilience and the overall structure remains strong. The RSI is still operating at a high level, and has not entered the overbought zone, leaving room for further upward movement. The MACD fast line is already operating above the zero axis, and the slow line is also approaching. Once a golden cross is completed, it will form a typical double dragon emerging from the water structure. As for now, there are signs of a death cross. However, it has not yet truly formed a 3-line pattern, and there is still a chance for it to reopen and expand, indicating that the bulls have not lost control. In summary, the technical aspect is in a strong oscillation phase, and there is still a possibility of another upward attack. In fact, the market trend in the past few days is very similar to mid-November 2018 and mid-February 2019. At that time, the market also repeatedly oscillated near the annual line. And in 2018, it wasn't until the 4th day that it successfully broke through the annual line. In 2019, it took even longer, as it retreated for 5 days after touching the annual line, before stabilizing and moving upward. This indicates that the annual line, as a key resistance level, is often difficult to break through on the first attempt. The market usually oscillates near the annual line for a few days, before finally deciding whether to break through or turn downward. From the 2-hour level perspective, although the MACD has already shown a death cross, it has not formed a clear top divergence structure, which is considered a technical correction. Currently, the stock price is moving between the middle and upper bands of the Bollinger Bands, indicating it is still in a relatively strong channel. The trend line remains upward, providing support to the overall price movement. From the moving average perspective, the long-term average price forms resistance around 56.93 points, while the short-term average price at 55.113 points provides current support. Let's take a look at the 1-hour chart. At this level, the MACD not only shows a death cross, but also a significant bearish divergence, indicating signs of a top structure in the short term. This signal seems somewhat contradictory to the relatively strong trend we just mentioned on the 2-hour chart. But precisely because of this, we need to be more vigilant, as the top structure in smaller cycles is often a precursor to a reversal in larger cycles. Of course, the top structure is just a probabilistic event, indicating an increased possibility of a downturn. But it does not mean the market will definitely turn bearish. If the market enters a phase of consolidation, this top structure might naturally disappear. In other words, this signal is not a reason for panic, but it reminds us to remain cautious and be ready with risk management at any time. Let's take another look at QQQ, which is the daily chart of the Nasdaq 100 Index ETF. Currently, the structure of QQQ is very similar to that of the S&P 500. Today, it coincidentally reached the DMARC indicator's high 9 signal, suggesting the market might be entering a period of rhythm change. Although it failed to challenge the annual high, it still closed firmly above the 5-day moving average, and during the session, it didn't even touch the 5-day line, indicating that the bulls still have strong control over the market. The MACD is also very positive, with the fast line already crossing above the zero line, and the slow line is quickly approaching. Once a golden cross is formed, it will be a typical double dragon emerging from the water structure. However, the KD indicator is slightly unstable. The 3 lines are close to a death cross. If the price fluctuates weakly in the next few days, it might form a confirmation signal. Overall, QQQ remains strong, but there is a short-term technical warning. It is necessary to continue observing whether it strengthens or weakens. Today, among the 3 major index ETFs, the Dow Jones ETF, DIA, had the smallest decline, showing relative strength. From a technical perspective, it is currently at a high 8 in the sequence, which may lead to a rhythm shift in the short term. From the daily chart, over the past 2 trading days, the price of DIA has been consistently suppressed by the black line in the chart, which is the 50-day moving average. Additionally, the annual line above has not yet been reached, indicating that pressure remains. Currently, the stock price is moving between the long-term average price of 415 and the short-term average price of 402, showing a narrow fluctuation structure. Most notably, today the trading volume of the Dow Jones significantly increased, while the S&P and Nasdaq had either equal or reduced volume. This may indicate that the market rhythm might shift in the coming days, with value stocks represented by the Dow Jones potentially starting to lead other indices in a rebound. The two airline stocks, AAL and Dell, mentioned on this channel over the weekend, both saw a good increase today. Let's take a look at the performance of the Russell 2000 ETF, which represents small cap stocks, also known as IWM. After the appearance of a DMARC Series High 9, IWM was unable to continue breaking through, but it has managed to stay above the 50-day moving average for the past 2 days, which is a decent performance. However, there is still a significant gap to the annual moving average, and bulls will need further volume support to continue. Today, many Bitcoin-related stocks and popular small-cap stocks experienced a noticeable decline, which serves as a reminder to us. If you want to get involved in this sector, you must be extra cautious because when small-cap stocks pull back, it is often both fast and deep. From a technical indicator perspective, the RSI, MACD, and KDJ are currently operating healthily, with no obvious issues. However, the structure remains somewhat volatile, so it is recommended to adopt a flexible defensive strategy. Let's look at two important macroeconomic data points that might affect the stock market tomorrow. First, the U.S. March International Trade Balance Report will be released at 8:30 a.m. Eastern Time. This report will detail the total import and export amounts of goods and services in the U.S. for March 2025, as well as the specific figures for the trade deficit or surplus. Since this data involves the dollar and foreign trade, OI, it holds very crucial reference significance for market trends. Another piece of data is the March Personal Income and Expenditure Report, which will also be released at the same time. This data will reveal the income, expenditure, savings rate, and consumption trends of U.S. residents, serving as an important indicator for observing consumer behavior and the potential for economic growth. Next, we focus on the auction of the 10-year U.S. Treasury bonds, which will take place at 1 p.m. Eastern Time, with an issuance size of $42 billion. The settlement date is May 15th, and the maturity date is May 15th, 2035. The Treasury bond auction not only affects interest rates, but also influences market expectations for future inflation and economic growth. Therefore, against the backdrop of increasing market volatility, the results of this auction will be closely watched by the market. In addition, the market is also closely monitoring sudden events such as the U.S.-China trade negotiations and the Russia-Ukraine situation. Investors should pay attention to risk management and remain flexible in their operations. Alright, that's it for today's market analysis. If you found the content good, remember to like and subscribe to me. We'll see you again at the same time tomorrow. Just a reminder, this program is for learning and reference only and does not constitute any investment advice. Please act within your means and make rational judgments. See you tomorrow. Bye-bye.